Hi everyone, I'm Paul and welcome to my review of Lesson 23 of ICT's 2022 Mentorship Program. Today's video is going to be a little bit different. We're going to focus specifically on the FOMC announcement and how the market reacts to this particular news event. We'll be looking at some of ICT's tweets prior to the event, as well as following along with his documentation of the price action post that FOMC announcement. But before we do, if you enjoyed today's video, it would be great if you could like it because that helps other people to find it. And if you haven't already, make sure you subscribe to my channel and turn on notifications so that you never miss an update. These are quick, easy, and free ways for you to support my channel. Lastly, if you'd like to hear more from me and join a community of like-minded traders, then click on the link in the description, which allows you to subscribe to my free newsletter and join the Discord. Now that that's out of the way, let's jump into today's video. So today's video is Lesson 23 of ICT's 2022 YouTube Mentorship Program. We'll just walk through a quick outline of what we're going to talk about in today's video. So the first section will be FOMC in focus. We're just going to talk a little bit about the FOMC announcement, that particular news event. We're then going to go through ICT's tweet discussion. Now these actually aren't tweets, they're actually messages from his community page, but basically he opened his Twitter account not long after this. So this is, just as good as his tweets from Twitter. And then we're going to finish with a walkthrough. It's not really a trading example of the price action following that FOMC news event at 2 o'clock on the 4th of May, and just talk about the price action after that. So we're just going to follow along with some of ICT's narration, and I'm just going to add some of my commentary in there as well. So starting off with FOMC in focus. Now, one of the big points that ICT raises throughout his teachings is that you shouldn't be trading going into the FOMC event or on that particular day or anywhere around that FOMC news release. And the reason for this is that price is just extremely volatile, and what you'll see is that the price will move in different directions and it will reverse back on itself a number of times before finally settling in one direction, either up or down. And so it's very easy for traders trying to, guess the final direction to get wrong-footed and stopped out. And it's just a very easy way, to get chopped up in this particular news event. And so it's almost like this particular news event is engineered to lose traders money. So it's just better to completely stay away from it and then just wait till after the fact to start looking for trading opportunities, or just not get involved at all and wait for the dust to settle. So the first post that we're going to look at from ICT's community page is this one. And you can see here, he says, get ready for some movement in the index futures. Note every set of relative equal highs and lows. This is gambling if you trade before FOMC. So this is what we talked about in the previous slide. At 2 p.m, the carnival ride begins. Now, if you haven't seen FOMC days before, then you'll get a feeling for the price action when we look at that a little bit later in the video. It goes on to say, if I were making the market, I'd drop it quickly and then run the highs from Tuesday. So let's have a look at the charts, and we'll have a look at this particular piece of price action and pull out some of these points that ICT's highlighted in this message from his community page. So we're looking now at the S&P or the ES from the 4th of May, and we're looking specifically at the price action around the FOMC announcement, so around that particular news event. And so that announcement happens here at 2 o'clock, so you can see that's this candle here. So that's when that event comes out, and you can see the market's been trading fairly normally up to that point, and then we start to get this extreme volatility with these candles moving 40 points each, and this one probably moving about 60 points before we duck into this bullish fair value gap, and then the market races away. So we'll just zoom out and just have a look. So you remember from the message on the community page, ICT talks about he would expect these highs from Tuesday, so that's right back here on the 3rd of May, to get run. And you can see after that announcement, we run up here, and then price gets ripped downwards. We trade right down into this bullish fair value gap. So we take the buy side liquidity. We don't quite take the sell side liquidity down here, but we trade right down into this bullish fair value gap before the market rips higher. And if we zoom out and look back, you can see that this particular move takes this buy side liquidity out from the 28th of April. So, almost a week or so before. And so that's quite impressive foresight by ICT. He mentioned watch those relative equal highs. So you can see those here, those get run. We'll take out that Tuesday high, and that will have the market sent lower before we go higher. And that's exactly what happened. And so the next message from his community tab that we're going to look at is this one. And so this is post that event, and ICT's, here feeling pretty pleased with himself, which is quite impressive that he was able to predict that. And then he says, open your NQ and ES 15-minute charts and drop a horizontal line along those smooth criminal highs in both index. See how we dropped into a discount overnight. Study how they treat those relative equal highs today and NFP Friday. So we'll look at that same piece of price action again now, but we'll look at it on the NASDAQ. So this is those relative equal highs, the buy side liquidity that ICT is talking about in that message on his community tab. So this is that price action at the FOMC announcements. You can see that run higher. We then create these relative equal highs overnight, and then you can see the market sells off as we come into the Thursday session, and you can see we come down, we take out this sell side liquidity, sells off even further, and we come and tag or sweep this sell side liquidity down here before we trade sideways, and then we come into non-farm payrolls on the Friday, and we get this volatility here. So looking at this, my interpretation of what ICT was talking about, I suspect he expected that we'd get another run up and potentially take out these relative equal highs here, but that didn't happen. But when I look at this sort of thing and I think about what would smart money be doing, well, they would be selling up here, and then would be looking at, buying at this sell side liquidity down here. So, assuming this is engineered, then this is where smart money would be selling, and this is where they would be buying. And so it makes complete sense if you base it on that hypothesis. So if you have a different interpretation of what ICT was trying to elicit from this, or what he anticipated what was going to happen, then drop me a note in the comments, because I'd be interested to hear some other theories about what we're expecting from this particular piece of price action. So looking now at the specific price action around the FOMC news event, so you can see we get this volatility here as we come into that news event at 2 o'clock. So I'll just mark that here so you can see just here we have it at 2 o'clock. We get this big range on these candles, and then the market starts to readjust there. And so what we can see is in this move we get a sweep of Tuesday's high, so that's the high just marked there. So you can see we sweep that, so we take out that buy side liquidity. We then get a displacement lower, and then we break market structure. So you can say we broke it here, but we also broke it here. So I like the swing lows when we have that prior to the liquidity being taken. So you can see that happens here, and we've got our bearish fair value gap forming here, and then our standard formation. So 1, 2, 3 candles, and you can see ICT has marked out that bearish fair value gap there, but we obviously have one higher than that as well just here, and you can see this particular candle trades into that as well. But as he teaches throughout most of the mentorship, that we take the first one, but we have to have a risk set so that we can accommodate price going up into that higher fair value gap. And so this is the exact model that's taught throughout the 2022 mentorship. We have liquidity being taken, we get displacement, we get a break in market structure, and our fair value gaps formed, and then the market trades back up into that fair value gap before running towards our target. And so in this instance, our first target is going to be this swing low here. So we're going to expect price to draw towards that point, and our final destination, or where we're expecting price to reverse, is down here in this bullish fair value gap, just down here where you can see we have this checkered flag where our finish line is going to be. And so if you remember from earlier in the video, we talked about ICT's message on his community page. What he was expecting is a sweep of those highs from Tuesday, the market to be sent lower before it being driven higher. And so that's sort of what we're expecting. We're expecting price to now react to that buy side liquidity being taken here, trade lower, trade into this bearish fair value gap. Now remember, we'll have sell side liquidity also resting down here at these lows here, and so you'd expect that price could potentially wick down into that or trade down into that, sweep that liquidity there, and then obviously trade higher as well. And so just moving forward in the price action now, and we can see how the market unfolded over the course of the rest of the session. So you'll recall from the last slide, we had the two bearish fair value gaps here. The market had already traded up into the first one and just wicked into that second one here. So you can see the market then trades down lower, and we actually take out that swing low there. So we sweep the liquidity there. Now this blue line represents a bullish order block from a higher time frame. So you can see price reacts to that after we've taken the sell side liquidity there and touched into that bullish order block. The market then trades higher. We go back up into this second bearish fair value gap, and you can see again price reacts quite neatly to that before driving lower and hitting our eventual target or our finish line. So we trade right into that bullish fair value gap just down here, and we actually do trade lower and take out that sell side liquidity down here. We just sweep that liquidity before the market reverses and then runs up to target. Now the target ICT selected is up here at 13,437, and the reason why he picked that, and this goes into how he uses his Fibonacci. Now there's a few points to note from the video that he talks about, and you'll notice when you watch ICT use his fibs, he changes how he uses them. So sometimes he will attach them to the wicks, and sometimes he'll attach them to the bodies. Now, from what he said in this video, he uses the bodies most of the time, but he'll use the wicks when there's more volatility. And so that's obviously a bit subjective about when you would do that. In this example, he's using the bodies, even though it would obviously be, you would assume it would be volatile around FOMC. And you can see that he actually uses both in the video, but he then settles on using the bodies, and that's how he came up with then this target. So he uses very specific fib settings, which he goes through in one of the previous videos, and you can see these become our first and second targets. And so this is the target that he used in this particular video, which obviously from the fib lines up to this level here, and you can see we not only trade up to that, we trade through that as well. Now whilst we're not trading FOMC, you can see that the model from the 2022 mentorship can be applied to this particular scenario, and then post the event, if you really did want to trade, there's actually a number of ways that you could then take advantage of that directional movement post the consolidation or post the washout of the announcement, if you want to call it that. So if we look at all the price action after we sweep this sell side liquidity here and we fill in this imbalance on this bullish fair value gap, you can see we get an immediate reaction. So you can see the displacement, and there's actually a order block just here. So we get a bullish order block just there, and if we mark that out, you can see that we trade into it here, and then it obviously takes off after that. Now there's obviously many other ways to get into trades from here, but the ones that stand out to me and that sort of conform, I guess, best to the model in the way that I understand it to have been taught, you can see we have a consolidation here before we get another big displacement upwards, and you can see we take out this previous swing high here, and then we paint a bullish fair value gap just there, and you can see we trade into that a number of times, so 1, 2 times before the market then runs higher again. You can see we get a similar sort of setup just here. So there's a little swing high just there that we breach with this displacement, and you can see the market trades through that. We come back into it, reacts to that bullish fair value gap before trading higher again. This is obviously much closer to the objective, but if you were trying to trade high, you could trade a continuation on this particular move higher using the fair value gap setup that we've used throughout the mentorship program. Thanks for watching my review of lesson 23 of ICT's 2022 mentorship program. I hope you found today's video helpful, and I hope you also learned to just sit back and relax and just watch the FOMC announcement from afar. If you did enjoy the video, it would be great if you could like it, because that's going to help other people to find it. And if you haven't already and you're enjoying this content, make sure you subscribe to my channel and turn on notifications so that you never miss an update. And just remember, if you'd like to hear more from me and join a community of like-minded traders, then check out the link in the description to subscribe to my free newsletter and to join the Discord. Thanks for watching, and I hope to see you next time.